Good morning, everybody. It's Wednesday, February 5th, 5:26 a.m. Central Time. Grain markets are mixed to higher this morning. March corn futures up 2 at 496.5. March soybeans down 1.5 at 1073.5. March Chicago wheat up 4.25 at 581.25. March Kansas City wheat up 6.5 at 601.25. March spring wheat up 5.25 at 627. Mackenzie, we hit 19,000 subscribers on YouTube last week.
Yeah, that's pretty darn exciting.
If you guys are not subscribed on YouTube, hit the subscribe button. It costs you exactly $0 to do, and it will help us out greatly. Also, if you're listening on the Apple Podcast app, make sure you leave us a review. Much appreciated. Okay, we've got some China talk. Let's start there.
So, China could aim to revive the Phase 1 trade deal as it negotiates with President Trump. China reportedly intends to use the deal established during Trump's first term as the foundation for its trade proposal. The 2020 agreement required China to increase purchases of U.S. goods and services by $200 billion over 2 years. Under the deal, China committed to significantly increasing its imports of U.S. agricultural products, including corn and soybeans. China did not follow through completely with the agreement, but may now be ready to renegotiate with Trump about possible areas where the nation can buy more from the U.S. On Tuesday, Trump imposed a 10% tariff on Chinese imports, although he has previously threatened tariffs as high as 60%.
The tables appear to have turned quite drastically, at least for the moment. For months and months and months, we talked about the prospect of a U.S.-China trade war and what that could mean for the soybean market in particular, maybe for the corn market. Now you've got language out of China indicating that they're ready for some sort of second phase of this trade deal. And Scott Bessent, who is Trump's Treasury Secretary, kind of talked about the same thing a few weeks ago. We mentioned it here on the program. But Bessent said that he would push China's government to live up to the terms of the Phase 1 trade deal it signed during Trump's first term. The Phase 1 trade deal, for those of you guys who don't remember, I'll run through some history. It was signed in January of 2020, following the trade war, of course. And as part of the deal, China agreed to buy at least $200 billion in U.S. goods and services over 2 years. That was 2020 and 2021, with about $32 billion allocated to agricultural products. The target for U.S. ag exports to China was $40 to $50 billion annually. Products included soybeans, corn, wheat, pork, beef, poultry, dairy, and seafood. So the general consensus is that China did not live up to the terms of the deal, although they did buy a significant amount of U.S. corn and soybeans, among other things. The deal was flawed from the get-go because they priced the targets in dollars. They should have priced it in bushels or metric tons. It would be much, much easier to track that way. But in any case, you've now got both parties on both sides. Scott Bessent here in the U.S. and reports from the Wall Street Journal that China is interested in some sort of deal. This is enough to rally the market. It's enough to cause some speculative buying and some short covering. We saw corn futures post fresh multi-month highs overnight. Soybean futures posted fresh multi-month highs overnight. The wheat market looks really good. So this is the latest and greatest headline, and it's resulted in some buying. But what's the next latest and greatest headline? It could be negative, and you could be right back in the other direction. So these trade war and tariff headlines are fickle for the moment. They're friendly, but it could change very quickly.
Argentine corn and soybean crops will likely be worse than expected. Drought has caused Argentine grain exchanges to reduce their forecasts for the crops, although farmers claim their projections are still too high. Dry conditions have disrupted the development and growth of corn and soybean crops. According to a local farmer, if rains return today, both crops would yield 45 million metric tons. However, if dry conditions persist, corn and soybean yields could fall all the way to 40 million metric tons. Rainfall is expected in the coming weeks. However, amounts and coverage are unknown.
I can't help but wonder if they're overly pessimistic here because I haven't seen any other crop estimates that are this low. I'm not going to say they're incorrect, though. It's early enough. And if the forecast doesn't change, maybe they're right. Argentina has been dry over the last 30 days. Most, or let's say many key soybean areas have seen like half of their normal rainfall over the last 30 days. Great map from our friends at Crop Profit here. Over the next 14 days, you're going to see 87% of normal rainfall in Argentina soybean country. So that's not a disaster, but it's not great either. And you pair that with temperatures that are going to run 4 degrees above normal on average, and I suppose that it's problematic. This is probably part of the reason that the soybean market's been able to rally despite otherwise bearish fundamentals. The world soybean situation is incredibly bearish at face value. And even with a lighter Argentina crop, I still think it's incredibly bearish. But the bean market continues to march on, and again, did post some fresh multi-month highs overnight.
Sovicon boosted its outlook for Russia's wheat exports. The Russian consulting group estimates this season's exports at 38.3 million metric tons, up 5.2% from its previous projection. Russia's ag ministry reported last week that 82% of the winter grain crop was in good condition. The report conflicts with the state weather forecasting agency, which reported that 38% of winter crops are in poor condition. Russia's breadbasket experienced harsh weather last year, including early spring frosts, drought, and excessive rainfall.
Let's take a look at a couple of charts I threw together here this morning. Here's U.S. and Russia wheat exports dating back to 1970. The U.S. used to be Russia with regard to wheat exports. We used to export a ton of wheat, and we export substantially less now, and Russia is the top wheat exporter. Now, if that number that Sovicon threw out there is correct, 38.3, that would be down for the third consecutive year and would perhaps open the door to some additional demand for U.S. wheat, which we really haven't seen a ton of. The U.S. only accounts for less than 11% of all global wheat exports. We used to be 50% back in the 70s. So we've lost a lot of market share. We've gone to other crops, and other countries have become bigger growers and exporters. The world wheat situation, I think, as I mentioned earlier, is fairly tight. It's projected to be, at least according to USDA, the tightest since the 14-15 marketing year. And the wheat market, I pulled a spring wheat chart this morning, has acted much better. I'd argue this is an upside breakout. It looks like some sort of bottoming action. I hope we can find some follow through here. The Chicago wheat and Kansas City charts look similar.
So if you guys have not checked out our premium content, you sure need to do so. Joe, can you tell me about some of our recent premium videos?
Our good friend Steve Johnson, who I called the crop insurance cowboy this time around, he is a crop insurance veteran. He's been teaching crop insurance for decades. Came on yesterday and talked about 2025 crop insurance decisions, everything from ARC to PLC to ECO, SEO, all the add-ons. He had some really great graphics. As with a lot of our stuff, like, you guys have your crop insurance agent, and you should absolutely continue to talk to and work with your crop insurance agent. A lot of our stuff involves unbiased third-party opinions, and maybe that's something that would be beneficial to you when it comes to things like crop insurance or marketing or budgeting. We're not saying you have to do everything that we say, but I think that some of the stuff that we put out will absolutely be helpful to you when it comes to making decisions. If you're a young farmer under the age of 35, I'm not young. I'm not a farmer either, but I'm not young, according to this metric. You got to watch this series that our good friend Shay Folk is putting together. We did a big survey of our young farmer subscribers. We had like 300 and something responses. And Shay is addressing through a video series all of their concerns, everything from marketing to land acquisition to transition planning, whole bunch of stuff. It's really fantastic. I believe the second video is going to be, the first one was out last week. The second one's going to be out Monday or Tuesday next week. If you want to see the premium stuff, go to standardgrain.com. You can sign up this morning. It's a $50 per month subscription. You can cancel at any time. No other fee, no other obligation. Nobody tried to sell you anything else. Sign up this morning. I'll forward you a copy of this morning's email, which includes a crop insurance video, Shay's Young Farmer video, a whole bunch of graphics, charts. Check that deal out this morning, guys.
U.S. farmer sentiment edged up last month despite ongoing uncertainty surrounding agricultural trade. Purdue University's CME Group Ag Economy Barometer Index increased to 141 in January, a 4-point increase from December. The slight increase was partially due to a rise in crop and livestock prices from early December to mid-January. 42% of producers believe that trade policy will be the most important policy affecting their operations over the next 5 years. Even though concerns about a potential trade war have somewhat declined, 40% of producers still consider it likely or very likely.
A wise man once said, nothing changes sentiment like price. And prices of the crops that farmers grow have risen, and risen quite substantially in the case of corn and soybeans. Wheat, some of the other crops still have a long ways to go. But yeah, nothing changes sentiment like price. And when prices go up, sentiment will improve. I still have, I still don't understand this barometer totally, because some of the prints don't make sense to me. It makes sense to me, though, that sentiment would have increased a little bit here.
ADM plans to cut costs as it navigates a decline in profits. On Tuesday, the agricultural trading giant posted its worst fourth quarter profit in 6 years. The company plans to reduce costs by roughly $750 million over the next 3 to 5 years. To do so, ADM is considering selling off sectors of the business that are experiencing reduced demand. The company will also eliminate up to 700 jobs worldwide during that same time frame. ADM's financial troubles follow an accounting scandal that forced the company to revise its financial statements twice last year and also led to a federal investigation. That whole situation resulted in the loss of billions in market value.
ADM stock does not look good. If your company and your stock is trading at 2020 levels, like just barely post-COVID levels, that's probably not a good thing. It seems like the hits just keep on coming here. Like every 2-3 weeks, we've got a new story about how ADM's got problems, and the stock posted fresh lows just this week.
The stock market bounced back on Tuesday after tariffs on Canada and Mexico were paused. The Dow Jones climbed 0.3%, the S&P 500 was up 0.7%, and the Nasdaq increased 1.4%. The advances came one day after Mexico and Canada agreed to Trump's terms for increased border security. The agreements resulted in Trump temporarily suspending 25% tariffs on both nations for the next month. The markets were also boosted yesterday when Palantir, an AI-related stock, surged 24%, surpassing fourth quarter expectations.
Yeah, if you want to know what's going on in the world, look no further than the stock market and some of our grain markets, I guess. I mean, it's good just kind of gauge of what's going on any given day. Stock market looks good to me. We're up 2.7% just a month into the calendar year. We had some weakness initially to start the week when we thought there was going to be trade wars, and now it looks like, at least for the moment, for 30 days, everything is kind of on hold. I think the China thing is still up in the air. Trump and Xi were supposed to talk today, and now the Journal's reporting that that's not going to happen. So wait and see.
We had a flash sale of corn on Tuesday. U.S. exporters sold 5 million bushels of corn to South Korea for delivery during the current marketing year. Accumulated corn sales are up 28% compared to the same period last year.
Yep, and we're going to stay competitive for a little while here, so I wouldn't be surprised to see this sort of thing continue. What did cattle do yesterday?
The cattle markets were lower once again. Live cattle were $110 to $150 lower. Feeders saw losses ranging from $145 to $225. Box beef was also down. Choice lost $126 at $330.73. Select was down $243 at $317.41.
Outside markets quietish this morning. U.S. dollars off. Stocks are off a little bit. The S&P's down 28. The Dow's down 70. Bonds are up a little bit. Gold's up $19. Crude oil is down 85 cents in the March WTI at 71.86. Have a great day, guys. We'll be back on Thursday.